taking the time to listen to our presentation. As you said, I'm the CEO and President, but I was also the founder. Myself and my colleague from Australia kind of moved down to Arizona here a few years back, picked up the project. We self-funded it. We did a lot of the early technical work because I'm a geologist and as is my colleague. So we've got a lot of skin in the game. Basically we don't make money unless all the shareholders make money on this. So we're going to be one of North America's lowest cost and newest copper producers. And a fairly bold statement, but I think at the end of the presentation, I hope you'll agree with that. We've completed the feasibility study. We announced those results and published a report earlier this year. And when you look at that study, it's outstanding results from an economic perspective, industry-leading operating and capital costs. One of the reasons we can do that is because, as Eric said, we're doing what's called in-situ recovery or in-situ mining. Very, very common in the uranium space. About 90% of US production is done that way. So if we have a look at this photograph here on the top right-hand corner, that's not our mine. That's the Beverly uranium mine in South Australia. And they have a series of wells. And so in the well in the foreground there, they inject a weak acid solution. And then there's a well in the background, and it pumps. And it's that pumping action that draws that solution through their permeable rock. And in their case, they dissolve uranium. So we're going to do exactly the same thing. We're just doing it in copper. So it's been done before in Arizona, and I'll talk a little bit about that. A few other highlights of the project. We already have our processing facility. We bought an SXEW plant out of receivership that's right next to us. So that reduces our capital cost to get started. It also reduces your construction risk. We've been working on this for some time. We filed our permits over 12 months ago. They're progressing well. And we expect to be in production in 2018. So we hopefully will time that perfect for the market. So this is the feasibility study. And you can see some fairly good results. All of these are in US dollars. We used a 275 copper price, a discount rate of 7.5%. And our NPV is about 800 million US after tax. The current market cap of the company is about 100 million US. So there's a big gap there. And we can talk about catalysts and how we hope to fill that gap between our market cap and the NPV over the next year or so. Internal rate of return's 40%. One of the earlier speakers talked about grade is king. Well, the equivalent of grade is margin. We have a big margin on this project. I've been doing mining for a long time, open pit, underground, all my life. Big company, small company. It's all about margin, and that's risk management. So average life of mine operating costs about 65 cents a pound. That puts us in the lowest quartile. All-in cost about $1.23. These are in US dollars, so that's all our sustaining, initial capital, operating, everything. That's outstanding. So we also run a sensitivity analysis here. Even down to 225 copper, we've still got an internal rate of return of about 30%. These are after tax, and an NPV of about $500 million. That's what that margin's all about for us. So, some of the advantages of in-situ recovery. Well, I've talked about the low cost. The reason it's low cost is because we don't move any dirt. We don't have a mining fleet. We're not drilling, we're not blasting, we're not excavating, we're not paying for truck drivers, we're not paying for a whole trucking fleet. So that cuts our mining cost in half. That means that we can access lower grade ore. It means that we can generate that margin that I talk about. It's also a very flexible mine plan. We're just drilling wells. We can start anywhere we want. Price goes up, price goes down, put more wells in, do less wells. Anywhere we want. Completely flexible mine plan. And then the environmental factors. This is a really green way to mine. Our ability to close this mine when we're finished without leaving legacies behind is outstanding. very low water consumption. You know, your typical open pit oxide operation, you know, you're spraying solution up on a leach pad in Arizona in 100 and something degrees. A lot of evap. We don't do that, you know. We don't have to do that. So exceptional environmental aspects to this project. So the little red star is our Gunnison projects. That's our lead project. I live in Phoenix. Most of our management team are in Phoenix. We have our own hydrologists, engineers, geologists, all those in place. About 2.5 hour drive. In-situ in Arizona has been done before. So probably the biggest one was San Manuel. It was a magma copper project, eventually taken over by BHP Billiton. That was a historic open pit underground and in-situ. But their in-situ part, they operated that for about 10 years. They had over 1,000 wells. They were injecting a weak acid solution, and then they were dissolving copper, pumping that out of the ground and sending it off to their plant. They were doing that at about 40 cents a pound. So this is a little air photo here. The big green blob, that's our North Star deposit. The resource is about 5 billion pounds of copper in the ground. Reserves about 4.5. So this is a big asset. And then of that reserve, we expect to recover that. The disadvantage of in-situ is it's a little slower to produce from, and you get, overall, you get less copper out of the ground. But the copper you do get, you make a lot of money on. So excellent resource. This is the Johnson Camp asset. We bought that out of receivership for $8.4 million at the end of December. In the foreground's the solvent extraction. In the background's the electro-winning. Our well field's only about 1.5 miles to the south of that. It's simple. We put in a well field. That's what a well field looks like. That's uranium well field from Nebraska. So we put in a well field. We start the solution circulating. We put the solutions in a pipe, goes into that pond. That pond's connected to the plant. We turn the power on and we're producing copper. It's that simple. That's why our initial capex is so low. So we have a "we are here" picture. This is a photo from the hills looking towards our project. We've done the biodiversity surveys. We've done the archaeological surveys. We don't have any issues on any of those. We're permitting mostly private land at the start. Water management, very low water use and very few water users nearby, low population density. So that reduces your permitting risk. Our performance, like most of the guys talking here, has been good over the last 12 months, and we expect that to continue because we have a bunch of catalysts coming. This is the schedule. So, as I said, we filed those permits 12 months ago. They've been progressing very well through the agencies. We have a great relationship with the agencies. We expect to be getting those permits out in the public domain sometime in the next quarter. We get those permits. The construction engineering is going on as we speak, and we finance the project, get it into production, and we're producing copper in 2018. So the light is at the end of the tunnel. So, in summary, big copper reserve, big copper resource, feasibility studies completed, great management team, industry-leading economics, and we're basically ready to go as soon as we finance and permit this thing. Thanks.